Welcome back. The National Assembly on Wednesday this week passed the bill to repeal the Banks and Other Financial Institutions Act, also called BOFIA. The aim of the review is to reenact the laws which have not been revised since 2004 to reflect latest developments in the financial market and integrate new features in regulatory provisions for the Central Bank of Nigeria. Now, normal legislative processes on the document started with the sponsors presenting the bill for the first reading on May the 12th, while a second reading was made on May the 19th. And that bill, when finally reviewed, will also require passage by the House of Representatives before being forwarded to the President for assent. But how will the review of the BOFIA impact on the markets and promote investors' confidence? Well, let's join the head of portfolio of management at Commercial Partners Asset Management, Victor Alui, for some conversations on this development. Good morning, Victor. Thanks for joining us on the program. Talk to us about the current scope of this bill and how it has successfully served as a guide for the industry till date.
Good morning. Thank you for having me. The Bank and Other Financial Institutions Act is essentially the premium legislation, particularly with respect to the regulation of the banking industry primarily, and then other financial institutions such as insurance industry as well. Like you said, this has been a long time coming, actually. I think the first attempt to update this act was mooted in 2018, but the activities there stalled and then were picked up again late last year and have gained significant traction over the last month thereabouts. I mean, in other climes, particularly even in sub-Saharan Africa, the acts that govern financial institutions and banks gets regularly updated, but we haven't had any updates on this since 2004, and you would agree with me that it's been quite a while, and it is important that these updates be done to essentially align it with current realities within the financial service industry and that space, and also to ensure that regulation is out there to strengthen participants and also ensure that the economy at large benefits from it. So I think these are some of the key things that, the new bill, if you will, seeks to try and address, particularly in areas of corporate governance, in areas of, liquidity management that will ensure that the bank stays solvent, in areas where, depositors' funds are also protected. I think these are some of the key areas that the bill focuses on to try and, keep it abreast and up to date with, current happenings and current realities.
Now, the bill is being sponsored at the National Assembly by Senator Uba Sani, who said on Wednesday that the aim of the amendment is to update and strengthen the existing act to effectively address the challenges being faced in financial services sector and in line with global best practices. What, for you, are the current constraints of the BOFIA?
Well, so just looking at the act and then looking at developments within the industry over the last couple of years, there isn't any clear provisions that cater to areas like financial technology, for instance, which is, quite burgeoning and is coming on really strong. There aren't clear regulations there that cater to that industry. There also needs to be some sort of strengthening in terms of areas that ensure that asset quality is maintained, areas that also ensure that the liquidity of banks is also well protected given current events as well. So I think it's just a situation where the bill has to be brought up to date in line with the realities that we're seeing out there. Much more importantly also is the ability of that bill to be able to envisage the sort of things that might happen going forward. So these are key areas that need to be focused on to ensure that we have a robust framework that guides the entire financial service industry.
But one of the things that the bill aims to look at is it seeks to enhance the efficiency in the process of obtaining and granting banking licenses. So help us to understand how this function should differ from the provisions of the Securities and Exchange Commission Act of 2007.
Well, for the provisions of the Securities and Exchange Commission, I think it is important to note that the SEC is the apex regulator for the capital markets. So what the SEC does essentially is purview within the capital market. What BOFIA seeks to do is to regulate the banking, primarily the banking industry, particularly if you look at the areas of microfinance banks, which have, come on quite strong over the last couple of years. It's important that, regulation, particularly in that area, be reviewed and updated. Like I mentioned earlier, financial technology as well. So for the SEC Act, it basically focuses on capital market operators, while the BOFIA essentially looks at, banking. Again, the BOFIA would also provide some kind of framework that ensures that the entire financial services industry is also properly regulated. So I think those are the lines of differentiations, if you will, between what the SEC does with its own acts and then what the BOFIA is also seeking to do.
But the review is also meant to help to prohibit the functionality of non-Nigerian incorporated financial services firms in the country, except under license. But today, Africa is talking about continental integration under the AFCFTA. Should that aspect of the review be given a second thought?
I don't think that aspect of the review necessarily precludes, the investment by, foreign entities in the Nigerian banking space. I think what it basically says is that the entity has to be registered here in Nigeria. So the CBN in its presentation, made mention of the fact that you don't want institutions that are registered maybe in a tax haven and then they want to come and get a banking license here in Nigeria. If you're going to get a banking license, you have to be registered here in Nigeria. I think that's the issue, really. I don't think that it precludes what the AFCA, seeks to do. I think it will still enhance that and continue to also support that. So I don't think that there needs to be a review of that. What it clearly says is that the entity has to be registered here, not a foreign registered entity coming to get a banking license.
Victor, part of the push for the review of the BOFIA is for the central bank to gain the power to manage failing institutions. What will this change in amount to across the industry?
Well, I think that has been an issue for quite some time, although we haven't had any issues with regards to banks failing in a couple of years now. But I think it is something that the central bank has paid a lot of attention to, such that part of what the bill is proposing is a banking sector resolution fund, if you will. The idea is to ensure that in the case where a bank has issues and probably has to go into some sort of receivership or needs some help, the CBN has some framework by way of the resolution fund that would help to take care of depositors, because at the end of the day, that is the key concern, really, to ensure that depositors' funds are safe. So I think the CBN, in conjunction with the NDIC, they are championing that. Part of what it also says is that that fund would also be funded by the CBN, the NDIC, and also the banks as well. It really remains to be seen the specific details of the framework. But again, for the banking industry, that will probably add another leg of expenses that they will probably have to bear with.
One other aspect is the fact that the amendment seeks to create a credit tribunal. But do you think that that's tenable, or for such tribunals should be merged with the existing Investment Securities Tribunal?
I think it is tenable, and I don't think that it should be merged. Like I highlighted earlier, the Investments and Securities Tribunal by the SEC essentially caters to capital market issues, right? Catering to capital market operators and issues that arise within that space. Resolution of issues within the banking industry is actually quite far removed and also significantly different from what goes on in the capital market. So I think that it is important that this be set up to ensure that the process of taking care of issues is streamlined, is put in the proper framework, such that there are any arbitrariness, if you will, in handling that. So I think it's well in order.
Now, let's talk about the fintechs whose activities the future BOFIA looks to regulate and update commensurate penalties for regulatory breaches in the financial services sector. What about the infractions and cyber fraud in the banking system today?
Well, I think the CBN continues to grapple with that challenge and continues to, through prudential guidelines, offer, guidance, if you will, for banks to ensure that these things are reduced significantly and brought to a bare minimum. For the fintech, I think the major concern of the CBN, again, will be to protect, investors or depositors, if you will, to ensure that you don't have an array of, unregistered, unregulated entities going out and taking monies from people. So I think the concern for the CBN would essentially be for regulators to be protected. And it's really key, that the sector is brought under some kind of regulation, some kind of framework is set up there to ensure ultimately that, depositors are protected.
Now, talking about the framework now, one of the things it says is that the review will enhance the regulatory measures for single obligor limits, the transfer of significant holdings, and the strengthening of the sanctions regime to make it more deterrent. Tell us, what does this imply for the banks and other industry players?
I think what the CBN is certainly trying to do with this is to create a situation where those MPL issues that we've had in the past will basically stay there. In the past, we've had issues with boardroom abuses, corporate governance lapses that have led to the significant challenges or even the collapse of such institutions. So I think the CBN is looking at strengthening these areas through regulation to ensure that we don't have a repeat of a situation where corporate governance lapses would lead to the failure of an institution, or institutions get bogged down by an MPL challenge. They're essentially looking to increase those single obligor limits, particularly for merchant banks, for instance. They're looking to increase that as well. For the commercial banks, they're also looking to increase that and set it at a pace that is from time to time determined by the central bank, given the realities of the banking industry at the time. So I think these are necessary steps by the CBN to ensure that the challenges that we have seen in the past that had bedeviled the industry and created challenges in the industry essentially stay in the past.
Now, would there be any way that this review will reduce the stress in the banking and possibly help cut down on financial services risks?
Well, I think it all encompasses that, and that's what this bill essentially seeks to do by increasing the single obligor limits, by looking at issues that have to do with compliance, issues that have to do with corporate governance. The CBN is essentially trying to use that to, in its presentation, to make a case for enhancing and strengthening the financial services sector, because they play a very pivotal and critical role in the economy. A lot of people have said that the banking industry has come under quite some stiff regulations lately, and it continues to happen that way because, again, the role that it plays is very critical, and it's important that they are adequately and properly regulated to protect not just the bank itself, the depositors, as well as the economy at large.
Now, I'm sure many would want to know how the review will promote investors' confidence.
Well, I think it's something to share about. What it basically says is that the legislators are abreast of issues, and they continue to work to ensure that the framework that governs the industry is up to date, is in touch with current realities. So I think in that alone, investors can be confident. Again, we'll remain to see what those specific details will be, in the key areas of corporate governance, the key areas of, risk assets, the resolution fund and all of that. It remains to be seen what the specific details are. Nevertheless, I think these are laudable measures that, if fully implemented in the bill, will strengthen the industry and certainly should, strengthen investor confidence.
Now, just before I let you go, Victor, tell us what will be the gains for financial inclusion?
Well, so, I mean, you're seeing direct, if you will, regulation that is likely to affect the fintech industry. And the fintech industry essentially is the frontier now that serves to drive even most aggressively the whole financial inclusion plan. So clearly, once we see regulation in that area that ensures that people are protected, it certainly helps quite significantly. So I think the effort that are being geared towards the provisions that would ensure proper regulation of the fintech industry would essentially help in channeling and also expanding the financial inclusion plans of the Apex Bank.
Now, but we understand that there's been a stakeholders engagement prior to now. What are the views of industry players on the amendment?
Well, for industry players, I think a lot of the major players have been are up to date. This is something that they expect because every now and then you essentially get, guidelines within the prudential guidelines that, essentially step up, the framework that guides the bank. So yes, it's something that is well welcomed because it would essentially strengthen the financial services sector.
Head of Portfolio Management at Commercial Partners Asset Management, Victor Lee, thanks for speaking with us this morning.